Morning, I'm Chris Swift. Welcome to Market Day Report. We had a really good wind up yesterday on the end of the month. Let's see how we get started at the first of the month, just before the opening bell. And last night's trade ended up with going a little bit softer. December down 2.5, 459 and a quarter. March down 3, 479 and 3/4. July contract down 2 3/4 at 501 and a half. And our soybean market, a little bit lower again on that. January down 12 1/4, 1330 and a half. March down 11 3/4, 1350 and a half. Out to the July contract down 11, 1369 and 3/4. And our Chicago wheat this morning, I saw it just a little bit soft too. Down a penny on the December, 569 and a quarter. March down 6 1/4 at 591 and 3/4. New crop July down 7 1/4 at 617 and a half. And kind of notice how we're perking back up towards that $6 handle in the back end of it. Kansas City hard red winter wheat, 632 and a half, down 10 3/4 on the December. March 632 and a half, down 10 and a half. May down 9 and a half at 638 even. July down 9, 643 and a half. And we'll wrap it up with Minneapolis spring wheat this morning, up 5 3/4 on the December at 702 and a half. The March down 9 at 720 and a half. May down 8 1/4 at 731 even. I got Brian Hoops from Midwest Market Solutions on the phone with me this morning. Brian, I hope everything is well with you today and looking forward to the first of the month and kind of towards the end of the year.
Good morning, Chris. Yeah, we're off to a decent start here this morning, but lower prices in the grains overnight. There were a couple private export sale announcements this morning. This is in soybeans. It's 132,000 beans to China and about 198,000 to an unknown destination. So for the week, we've had no corn sales, no confirmation of wheat sales. We've heard rumors that China had bought some wheat, but no confirmation of it. And for the week, this is about 2 sales of soybeans to China, 2 sales to an unknown destination, which I think will end up being China if, in fact, they go through with these sales. Again, these are hedges against production problems in South America, but with the rain in the forecast, and that already has fallen, has kind of decreased some of those dry areas in the northern belt. And in Argentina, they've been off to a great start to their growing season, and you can see that reflected in soybean meal futures. We're going to end the week lower this week. In fact, we're starting to take out a lot of key support in meal, and that's dragging the soybean market down along with it. So, we're seeing some decent export business for soybeans, but the market is not reacting very positively to it at all.
Yeah, and I know that the bean oil has really been in a bear market. I mean, it's been going down, and currently we're very close to contract lows. And the meal had been the shining star. With the meal kind of losing some of that strength now, that doesn't look very good for the beans at the moment, does it?
Yeah, you can't have a strong rally in soybeans without participation in the meal. And the reason why the meal market has been so strong, as you mentioned, is Argentina had a drought last year. It severely curtailed their production and how much they could export as far as soybean meal. And the U.S. really regained a large share of that business. Now, the market's always looking ahead and anticipating that. And right now, it's anticipating Argentina is going to have a big crop of soybeans and crush them and sell them out as soybean meal. Starting in this spring timeframe. So it's definitely, markets right now struggling with that ideas that they're going to have a big crop, and we're starting to see that reflected in the meal futures, which are dragging soybeans lower.
Right, and Argentina does have a very large crushing influence in the world. I'm pretty sure they're the second or third largest crusher in the world, are they not?
Yeah, they're number one, actually, as far as exports go, and that's where China gets a lot of their soybean meal products from. To a lesser extent, it's been the U.S., and we kind of regained number one share this year because of their drought, but certainly doesn't look like they're going to have a drought. They're off to a great start in Argentina.
Fantastic. And then the wheat market kind of softened back a little bit, and it seems like we're going to miss a little bit of these rains that we're getting here in the southeast now in the Midwest. But do you know of anything in the crop condition of the wheat that might be of interest to us right now?
Yeah, the wheat market, as far as the USDA says, we're not going to receive any ratings on a weekly basis. State by state, we'll definitely have some ratings once a month. But, wheat's going into much better dormancy, into much better shape than was a year ago. Over 50% of the crops now rated good to excellent. I'm here in the Southern Plains in Springfield, where we have some wheat in this area. It looks tremendous, and it's going to continue to grow. It's going to be in the 60s next week. So the moisture that we've been receiving this week is going to translate into even a better looking crop as we go into December in here. And once that crop actually does go into dormancy, it's going to be pretty highly rated, especially compared to last year, probably at least 20% better ratings than a year ago. And you look at, the markets had a 3-day rally. I think it's going to be a little disappointed here, and certainly starting to show signs of it in the overnight trade without lack of confirmation from China buying U.S. hard red wheat futures.
Right. Well, and that's good because I know we need some of those wheat pastures for our cattle production. Speaking of cattle, stay with us. We're going to take a real quick commercial break, and we'll be right back with Brian Hoots talking about the cattle market. Stay with us. Welcome back to Market Day Report. Anxious to see how the cattle market is going to open this morning because yesterday was not a very good close, as we can see. So let's catch up with yesterday's close and see where we're going to start out this morning. December down $1.02 at 170.87. Feb down 165 at 171.82. April down $1.50 at 174.42, and the June contract down 135 at 170.20. Feeder cattle market was soft too, but all of these came off of their lows significantly. The Jan down 2 1/4 at 219.95. March down $1.70 at 222.57. April down 165 at 226.67, and May down 162 at 230.50. I'm pretty sure the feeder cattle index is hugging right around that 224 level and change. December hogs were mixed with Dees down 20 at 68.77. Feb up 137 at 71.47, and April up 87 at 77.35. I'd like to ask Brian Hoots to come back in this morning and talk cattle for just a second. And Brian, you mentioned the wheat. I know that we graze a lot of wheat for cattle out there. Is there something that we can see in the cattle market that's going to kind of buoy this decline that we've got, or are we unfortunately looking for lower prices?
Well, I'm trying to be optimistic and find some fundamental that we can hang our hat on here to give us some sort of a bottom in the market. And really, the best thing is the discount that the futures are already holding to the cash markets, because the rest of the news isn't all that favorable for cattle at this point in time. We did see a bounce in the box beef finally yesterday. It's been a long time coming. A lot of people looking for it with the slow slaughter pace last week, but the packer margins are still slightly negative. So that's one negative thing here for the cattle market to contend with. Cash trade was $2 to $3 lower this week, and could be lower again next week. The futures already anticipating that we're going to see a little softer cattle markets out in the country. The steer weights yesterday that were announced, another negative piece of information, 936 pound steer weights. That's a record, all-time largest, 6 pounds above year-ago levels. So, again, not anything that you really going to say that's really bullish for this market. It does appear that in the hog industry, cattle industry, producers trying to feed out those animals a little bit longer, trying to get to some better cash moves, hopefully in the weeks or months to come. And that's putting weights on the hogs, putting weights on the cattle market. And usually that's not real bullish. Plus, you have December options going off the board today. Deliveries start on Monday, and I just don't see any reason that we'll expect any deliveries at all when we get into that delivery period next week.
All right. Well, Brian, I certainly do appreciate you taking the time to be with us this morning. That is Brian Hoots. He is with Midwest Marketing. And Tammy, I think we're going to get the morning started off here. The bell's going to ring here in just a few minutes.
Yeah, it's been a very interesting week.
It really has, and I'm anxious to see how the first of the month's going to start off.
Me too. Oh, that's right.
Yeah, this is.
All right.